can you just briefly kind of explain some of the moves that we saw in Bitcoin and some of the other crypto stocks this week, particularly as it relates to some of the chatter that we saw on Twitter and some of the other social platforms?
Absolutely. Hi, Romaine. It's been quite a week. Are you hanging in there? It's Friday.
Yes, I am.
I'm ready. So crypto markets are 24/7, 365. I'm so grateful that traditional markets close at 4. We punch the closing bell. We're done for the week, I hope. So Monday we get to start all over. But let me just briefly clarify for your listeners and viewers what's going on in the crypto space. So obviously going into the end of last year and going into the start of this year, we've seen a dramatic shift in sentiment around Bitcoin. And at CoinShares, we manage $4 billion in assets on behalf of clients ranging from retail investors to institutional customers who are buying our exchange traded products. And what we've seen is a dramatic shift in the way that people perceive cryptocurrencies. In 2017, when we had the first real crypto mania, crypto frenzy, people didn't know if they were buying Amazon.com or Pets.com. People were just buying coins without really much of a barometer for what they were getting. And the landscape has shifted dramatically. As you've alluded to, we see people like Elon Musk, or Papa Musk as he's been dubbed by the Twitter crowd, talking about Bitcoin. But more importantly, what happened yesterday that I think was a real shift is Ray Dalio of Bridgewater Associates published a 14-page research brief outlining his views on Bitcoin. And the opening line was, "Bitcoin is a hell of an invention." And so that really, I think, stimulated bullish sentiment, as well as options markets in the Bitcoin space. We had one of the largest expiries ever last night, 3.3 billion in options settled. And so that also contributed to bullish sentiment as the forward curve continues to be in contango.
Within the Reddit chatter this week, there's frustration, of course, when the brokerages were shutting down or limiting how much you could buy on certain stocks. Can you be confident that that doesn't happen with crypto?
And look, Taylor, I think the challenge here is it's really not the crypto side that's constrained. It's the US dollar side. So the issue that Robinhood has with their crypto trading that is also suffered by Coinbase and Gemini and Kraken and all of the crypto trading platforms is people have to fund their accounts in order to buy cryptocurrencies. And the way you fund your account is with US dollars. Now, the US dollar, unfortunately, is part of the correspondent banking system. And as you know, sending a wire is not instantaneous. There are limits on how much you can ACH or instantly deposit into these platforms. And so really the constraints we're seeing are on the cash side. The other point I want to just clarify a big misconception that people have. A lot of people believe there's a lot of leverage in the crypto market, and this is actually not true at all. It's impossible to get margin. You can get leveraged products, but there's no margin. There's no cash borrow in the crypto space. So the big constraint here is really cash, which is very expensive.
When we talk about the retail frenzy this week, obviously leverage was a big part of that with regards to the equities. The other part of that was the settlement, the clearing of that. There still is a settlement clearing issue, which you sort of alluded to there with the crypto space here. And I'm wondering, given the fact that it's obviously less centralized than what we get with equity trades and options trades, is there any sort of fear or risk that you see out there if you get so much volume coming in, whether it's buying or selling, that the various exchanges won't be able to handle it?
Yes. So again, I think the big challenge on the exchange side, what's so fascinating is these exchanges are settling trades in real time for millions of customers on a day-to-day basis. Latest numbers from Coinbase, which is about to IPO via direct listing, is they have 45 million customers. So that's a lot of folks on your platform. The issue here, again, isn't really on the crypto side. Crypto to crypto venues are using the underlying blockchain as the layer to which they settle transactions. And settlement happens with finality, which is not what happens in traditional securities. And so really it's a fundamental structural difference here. The big change that I think will happen as we look at the way crypto markets operate and the efficiency we have there, I think there is a lot of talk about a digital dollar. Obviously, there are numerous G20 economies which are exploring digitizing their currencies using blockchain technology that could potentially be interoperable with the Bitcoin network, the Ethereum network, and other public blockchain networks. And And so I think the big question that will emerge now is how do we migrate not the crypto space into legacy finance, but is there an opportunity here to take what's happening in the traditional finance space and drag it into the future and digitize it and disintermediate it and distribute it in different ways using this technology?